In today's episode, we are going to look at what are DIIs and FIIs buying together at the same time. Now, we know that FIIs have been selling a lot in the Indian market, but I like to keep a track of what DIIs and FIIs together are buying at the same time. And they're reducing stake either from the promoter or they're reducing stake either from the public market. And this basically gives a sign of bullishness. So today I found three companies that it looks very interesting, and we're going to deep dive into it very quickly. Please note, I'm a SEBI registered research analyst, and this is not a buy or sell recommendation. And as of doing this video, I do not hold these companies as well. So let's quickly go into company number one. So the first company which is going through both a transformation of DII and FII buying, and if I show it to you here, you will actually see it here. As you can see, March 2026, you can see that the FIIs have increased stake from 17.45 to 19%. The DIIs have taken from 23 to 25%, and the public shareholding has actually gone down from 55 to 58 to 55% over here. So public shareholding has actually gone down. And why is this the case? This is because BSE has been on an absolute momentum rally, and even though the F&O futures and options market has gone down, BSE somehow has consistently given very good returns and consistently grown over a period of time. Now, why is this the case? Why is this happening? And why is this shocking for people? Is basically because BSE is now taking market share from NSE, and that is where the game is currently being played right now with respect to this company. If you look at the chart of BSE, you will see that it is on an absolute tear. It has recently broken all-time high. This was the all-time high that it had made. And it recently broke that all-time high, and now it's gone to its new high as well. BSE is actually doing very, very, very well. The market cap it's a large cap company, 1,47,000 market cap, and EPS also has been growing. And if I show you the research, let me show you the research here as well. Yeah, look at this. So basically, futures and options is driving the momentum, and it's giving absolute tremendous growth in this company, even though it is very weird that the whole market is not doing well because of regulations and F&O volume is actually down. This is the only company that's still doing well. Even NSE's results didn't come out so well, but BSE basically it's taking market share, and that is why it's getting buy ratings from all across the market, right? So they're doing really well. As you can see, they've got 11 consecutive quarters of record revenues, and that has basically hit new highs. And now they're expanding into other segments as well, but major revenue is only coming from the F&O and derivative department. All the other revenues are actually dipping. As you can see, the year-on-year growth rate of all the other stuff is actually dipping. So if I go here, if you see the revenue from star MF trends, it's dipped. Fee trends has dipped. Equity transaction revenue has dipped. Only derivative transaction revenue has actually gone up, and as you can see here, and that is basically what is driving this entire growth. So this derivative revenue continued surge, that is basically giving the peak momentum for this company. So this was company number one. Now the second company I want you to look at, but again, before I complete this, the BSE is currently trading at a PEG ratio of 0.97, but the P ratio of this company is slightly high at 68. Usually what happens when in this kind of a market where everything is looking bad, sometimes some companies have a good ratio or a good growth, and that is why the P ratio is usually at a premium, because market doesn't have anywhere to go, so they will come here only at that point. Now the second company I want to show you, look at this. So the promoters are selling here 54 to 40. Now promoter selling is not a bad thing. A lot of people assume that promoter selling is a bad thing. It's not a bad thing, because if the promoter is selling to the public, yes, it can be construed as bad. But the promoter, if they sell to FIIs 15 to 22 and DIIs 25 to 32, then it's not considered a bad thing, because the liquidity fluctuations will not happen. This company is called Vishal Mega Mart, and if you see, the public shareholding is only 5%. And again, Vishal Mega Mart is, if you see the revenue of Vishal Mega Mart over here, they have been growing very, very, very fast. This is like a chota D Mart kind of a system, and they grow in a very simple pace. Basically, if there is growth in stores, the more stores they add, the more mature these stores become. That is basically how they keep growing over time, right? So that is something that you should again look at. And if you look at Vishal Mega Mart here, the growth is there. The PAT growth is also kicking in. EPS growth is also slowly kicking in. And if you look at their debt to equity ratio, as of now, it is good, and they have a lot of fixed assets. They are free cash flow positive. Their ROC is 13, which is absolutely not bad at all. And if you go up and see their PEG ratio, they're at 1.65. P ratio, again, as you know, it is at 74.5. It is usually on the higher end only, and these companies are usually like that. And the problem of this company, if you look at it, was at one point, once it came out with an IPO, it went up very fast, very similar to DMart. And then from 150 points, it actually fell down to 100, wiping out a lot of investor wealth, and now it's coming back. Basically the reason why this was the case is because this company was trading at a PE of 100 and 50, if I'm not wrong. So it was trading at a PE of 150, and that is where the whole problem started coming up with this company as well. So now that 150 PE is gone, now everything has become absolutely fine, and now it's come down to 74 PE. It is still premium. I would not say 74 PE is cheap. It is still premium. But what people are doing is they're pegging the future growth into this. So future growth is getting entirely baked into this kind of a company, and that is where the growth and all the other factors are coming in. And this is only going to grow because of same store growth rate and how they're growing with respect to the number of store additions. As you can see here, the number of store additions that they're doing, and when the store gets mature, they get more money out of the stores, and that is basically how they make a lot of money, right? If you look at the research report very quickly, again you see here, Motilal had given a buy from 120 to 170, 42% gain from what they had quoted on Jan 28, and the target price was 170. Now it is currently at 120 itself. And if you look at it, they are basically quoting for 17% year-on-year growth, festive growth, and the adjacent same store growth rate as well. And if you see, they have been adding a lot of stores. So if I go directly down to the management commentary, yeah, if you see the management commentary, they are saying that the demand trends are still looking good, right? Management is still confident about the medium term, GST changes, everything. And store addition, they added 29 stores in the third quarter, 79 stores in 9 months. And this is basically, they'll keep growing the stores and they will do this. Obviously, they have huge competition from the likes of Blinkit and Instamart and all of that, but they are playing in a different version, very similar to who's this guy, very similar to DMart. In fact, DMart also now has come with quick commerce. So here also they have quick commerce initiative. I expanded to 723 stores, but people still prefer using Blinkit and all of that. But this is the second company that's doing really well. Again, valuation wise, not favorable as of now. Now coming to the third company, recently came out with an IPO. Again, if you see, the promoter holding is 75%. FII holding has gone from 4 to 5.72, and DII has gone from 10 to 14. Okay, so massive. And government of Singapore usually comes, they stay for a long period of time. Investor FlexiCap is adding more. Kotak small cap and Motilal small cap has also added, and the public shareholding has gone from 8% to 4%. And this company is called Aditya Infotech. Aditya Infotech is nothing but your CP Plus. So CP Plus, basically what happened in this company, I'll tell you. In India, majority of the cameras, CCTV cameras across India with traffic cams and different places, were usually with Chinese companies, which was Hikvision and Dahua. Okay, two companies were dominating the space. After that, what happened is, in one of the wars, we came to know that Chinese was using our Hikvision cameras to hack Indian streets and all of that. So now government has come out with the rule that we have to remove all these Chinese made cameras and go to make in India cameras, which is CP Plus. And CP Plus is now doing backward integration. Instead of building systems, they're going and doing tie-ups. So they've tied up with Orient Cables to basically do the entire network cables under the CP Plus brand. So this, I mean, you would have heard of the Upar wala sab dekhta hai kind of a thing. So this is what it is. And they've given very aggressive guidance also. As of now, the guidance is 3,900 to 4,100. Again, guidance, we have to see. It's a new company, so I don't want to jump to conclusions by looking at guidance. We will take it as it goes. As and when the management starts performing, that becomes a good sign for us to also look at, right? Now coming to the share price of this, as you can see, it has recently done an IPO base breakout. So this was the base breakout it did over here. And then from there, it has gone up quite a bit. If you see from the IPO base, it has gone up almost 34% since the IPO base. So it is actually now in a momentum zone only. That is why it is going up constantly. And because of the growth that has come into the system, that is where it is moving aggressively. It's a 27,000 crore market cap company, means it's fairly small. It is in the mid cap to small cap range. The PEG ratio of this is 5.78. The P ratio is at 107. So a lot of it is already baked into the ecosystem. So I would not be too gung-ho about it. But these are the three companies that I wanted to basically talk about and show you as to where FIIs and DIIs both in this bad market, where are these guys taking positions into. Again, I hope you guys enjoyed this and I hope you guys like this. And if you have any doubts, any questions, please let me know in the comment section below. This is me, Shashank, signing off. Take care. See you guys. Bye-bye.